What's up, guys? This is Ty Zen. I'm broadcasting from a Starbucks in Boston, Massachusetts. Okay, this is the city where the World Bitcoin Network headquarters is at. Okay, without James D'Angelo. Okay, so on the other side of this camera, I got my buddy JW with me again. Say
Hey.
hello.
Hello. I have a lot of good questions for you.
Yeah. So JW was asking me here about some questions. He had some questions about what causes the price of Bitcoin to go up. So I'm going to share with you guys my thoughts and my observation. Now, I want you guys to know the background I have, okay? So I've been trading stocks, futures, and currencies since the beginning of 2008. So I had the opportunity to trade through the biggest stock market crash in human history. Okay, so I learned a lot during that time, and I've had the privilege of having lots and very, very good traders that have coached me along the way throughout the years. So keep in mind that what I'm about to share with you guys about what causes the price of Bitcoin to go up like crazy, when it does, okay, when it does, it goes up to the moon, like very, very quick and very rapidly. And I want you guys to understand that what I share with you guys is based on my experience and my observation in traditional trading from stocks, futures, and currencies. This is not from, I'm trying to take what I've learned in my experience in trading from the traditional asset classes and apply it towards this new asset class called cryptocurrencies. So I want you guys to always keep that in the back of in your head, right? That's where I'm gaining my knowledge and experience from, so you guys are aware of it, okay? So before I share with you guys how the price of Bitcoin runs up very quickly, like it is right now from 425 in the low 400s, now it ran up to like, it broke above 470 as I'm making this video. I want you guys to be aware of something, okay? In the stock market, right? Whenever you have a big institution, the only people that are capable of moving the prices in the stock market is people that have a lot of money. And we're not talking about somebody that's a millionaire that has $500,000 or $1 million in their trading account. We're talking about somebody that has like 10, we're talking about somebody that they can lose 10, $20 million and it doesn't hurt their ability to trade. Okay, they can continue trading their same strategy or invest in the same strategy without any problems, okay? So when the big institutions, I want you guys to imagine how the big institutions buy and sell something, okay? When they are buying and selling a stock, let's say that we have the construction workers union here in Boston, and they need to buy 1 million shares of Apple stocks for their union employees, okay? What they're gonna do is they're not just gonna go in there and just buy 1 million shares of stock right away, because if they do that, everybody's gonna see their order and it's gonna jack up the price as they buy it from all the bids and from the ask and the offer, from the people who are asking a certain price for their Apple stocks and from the people that are offering a certain price for their stocks. It's gonna run the price up. So what they have to do is they have to go in and buy a little bit at a time, 100 shares here, 100 shares there, 50 shares here, 10 shares there. And when the big institutions are buying stocks, right, they never buy at a one price, like an individual like you and I. Like if we go in, we want to buy Apple stocks, we'll buy it at 120, 130, whatever the price is, right? The institutions never buy one set price. The way that they buy is what we call an average price, meaning that when they buy that 1 million shares, their analysts and their research team at the trading firm, they establish and they make an agreement with the union, the construction workers union, that hey, you know what, we are going to do this, and they agree that they're going to buy Apple stocks at $120. So when they do that, what the trading firm will do is that they will create an algorithm and create some software, and what they'll do is they'll put a cap on the price and a ceiling on the price of the stock, and they put a floor in on the price of the stock. And what happens is when they put that ceiling in and that floor in, the computer algorithms will go in and they'll buy the stocks, and as they buy it, it'll run the price up. And on purpose, they will sell the stock to run the price back down. And as it comes back down, they'll buy back in and bring it back up. So it will cost them money to push the price back down and buy it back up. So they play this ping pong game in the markets. That's why you see the markets consolidate. So when the market's just going sideways like this, that's what they're doing. Except you don't see that. You only see the results of it. You don't see the actual computer algorithms being at work to compress the price and buy within that range, okay? And they are willing to spend, hundreds of thousands of dollars, even millions of dollars to get the price, to lock it in so that they have an average price. Sometimes when the price comes up, and it comes up too fast and too high, and it's outside their range that they want to buy it at, they will purposely sell the shares that they have to really quick and really fast and push the price back down so it stays within that range that they want to buy the shares at. And once they accumulate their million shares, they remove that algorithm, and what happens is now the price of that stock can go back to its normal market price, and then either it shoots up or it drops. Either way, the union gets their shares, the trading firm gets the shares that they want, and they get it at the average price that the trading firm and the union agrees on, and they make the exchange, they get paid, and everybody's happy. Meanwhile, the price of the stock continues either up or down on its natural course, okay? Now, I share that with you guys because in the world of stocks and futures and currency trading, there's a lot of government regulation that makes it a little bit difficult to do, so that you have to have a lot of money and lots of good computer programmers to create those algorithms to be able to do that. And it only works in a temporary time period, and then after that they have to update the algorithm. So it's not something that you can just plug in and then just let it run all the time. You put it in, and then the trading firm has to monitor it, update the software on a constant basis, sometimes on a daily, weekly basis, but it's constantly being updated and it's constantly being monitored by humans. There's no algorithms out there that just run 24 hours a day by itself without human oversight or human watch or human intervention, okay? In the world of cryptocurrency trading, the advantage you have is that you don't have a lot of these regulations that the government puts on for trading, because it's a new asset class that's being created. Everybody understands what bonds are, what precious metals are, what stocks are, what commodities, what futures are. Everybody are familiar with that. So everybody knows the regulations behind trading and investing in these traditional asset classes. But for the cryptocurrencies, it's a new asset class that nobody knows about. The government doesn't understand it, and they don't have the correct regulations and the rules on it. So what happens is you have a lot of big traders that can connect you have traders out there in the Bitcoin world that are very, very good computer programmers, like leonfu.com. The problem is, like my buddy leonfu.com, he is by the way, his name is Leon Fu. We just add the .com on behind it because he's really freaking nerdy, okay? So don't waste time going to the website or nothing. We just call him that because he's so nerdy, okay? When leonfu.com, he has computer skills and I have trading skills. If we match it up, we can figure out some algorithms to trade Bitcoin too. The only problem is right now, it's just, for us, it's a waste of time, right? You gotta have a lot of money to trade these things, to build these algorithms, adjust it, have coders on hand, and so all that. And so we have people out there, I don't know who, okay? I don't know who. I don't even have the evidence to even show you guys that there are programmers out there and heavy traders out there that are doing this. But what I can show you guys is what it looks like on the charts, okay? When you see these huge monster moves up or down in the markets, in the Bitcoin market, that is caused by people with lots of money. It's not by people, you and I, who are trading half a Bitcoin, a quarter of a Bitcoin, or half a Bitcoin. It's none of that nonsense, okay? It's people with millions of dollars, okay? And what they do is they unload the price. They will put those algorithms in and cause the price to just stay locked in. If you guys have noticed, let me pull up the chart here so I can get the information correctly, right? If you look at the daily chart of Bitcoin, and I'm looking at the daily chart of Bitcoin on Bitfinex, and we're looking at the daily chart, okay? If you guys look at the daily chart of it, almost every analyst, cryptocurrency analyst or trader has seen, and it's very obvious that it is going into a wedge pattern, okay? Like this, it's going into a wedge pattern. Now, if you guys don't understand technical analysis, a wedge pattern indicates a consolidation. That means that the price is consolidating, and whoever it is or group of people, usually it's guys with big money, they are consolidating and they're pressing the price down to get those average price of the Bitcoins that they want. And if you guys noticed recently, there has been a break outside that wedge. Now, every technical analyst agrees that that wedge formation in the price of Bitcoin, that wedge formation is a consolidation. And what a consolidation means, some people call it a consolidation period, some people call it an accumulation period, okay? Now, I like to use the term accumulation because it actually describes what's going on in the markets as it's coming to a wedge, okay? Like I told you guys, those algorithms that are trying to buy those Bitcoins, they're keeping the price at a certain point, and then after they start to accumulate more and more of the Bitcoins that they need, it compresses, they bring the algorithm prices in, okay? And what happens now, the price is bouncing back and forth because they are nearing the completion or their accumulation phase where they acquire all the Bitcoins that they need. And then once they acquire all of the need, they remove the algorithms because it's no longer needed to gain that average price of the Bitcoins that they want. So once they let go and remove their algorithms from the exchanges, what happens is the natural price of Bitcoin automatically moves, okay? So now, because of that, right now it's going up to above $470, sorry about that. And then once it starts to go up, what happens is Bitcoin, whenever it runs up, since it's the granddaddy of all the cryptocurrencies, no matter how much you hear me talk about Ethereum or any alternative cryptocurrency, always remember that there is a reason why Bitcoin is worth $470 a Bitcoin while everything else is worth, pennies, or Ethereum is worth like $7, which is the highest one so far. There's a reason why Ethereum, Litecoin, and all these are worth $4 or $5, $3, $4, $7, while Bitcoin is worth $470. It's not even in the same league of value, okay? So don't ever forget that. No matter how many videos you guys see me make or how many videos you see other people make online, right? The price, there is a value to Bitcoin. That's why it's $470 a Bitcoin, okay? Versus $7 or 7 cents, okay? So what happens is Bitcoin creates what's called a wake. Okay, a wake is when a boat or something fast cuts through the water and it leaves a wake behind it and it sucks you in with it, right? If you guys have ever been like near a train station in New York or in Boston, or by a car that goes by real fast, if you guys stand there and the train goes by real fast, it tends to suck you in with it if you stand too close. And so because all these alternative currencies, cryptocurrencies outside of Bitcoin, they are all dependent. You can only buy Ethereum with Bitcoin. You can only buy Litecoin, Dogecoin, NXT, any Augur, anything, right? Everything that you buy, you have to do it with Bitcoin. And then once you get into that alternative cryptocurrency, then you can use their cryptocurrency to make the exchange. But you still got to buy it with Bitcoin. Everything has to go through the Bitcoin before it becomes a fiat or before it becomes a cryptocurrency, okay? So because of that, all these alternative currencies are very close. They're very, very tied to Bitcoin. So when Bitcoin shoots up in price or goes down in price, it creates a what I call a price wake, okay? And that doesn't mean like you wake up. It's more of like a wake, like an ocean wave, okay? And it creates a vacuum that sucks everything in with it, okay? And so because of that, it will suck in the price. Right now, if you look at the history, I've noticed, and this is just a personal observation of mine, it's not a fact or anything, I just noticed that when Bitcoin shoots up really big, when it first starts incline and go up in price, the price of the altcoins will go down in value. But then if Bitcoin continues to go up higher and higher, the altcoins start to go down, but then it starts to turn around and follows along with it, okay? And it drags it up with it, okay? So I just want you guys to understand that as you guys see the price of Bitcoin shoot up and the price of the altcoins going down. Okay, that's the main reason why. Does that help? You got any questions about that?
No, I would love to know who's buying these Bitcoins. Although the volume is only 80 million.
Yeah.
So it can't be, or I don't think
it's not an individual.
Yeah, but I don't think it's a big bank or a big institution.
I do believe it is a big bank or a big institution. It has to be somebody that has a lot of money.
Yeah, but if the average volume is say $40–50 million a day,
yeah,
it's only 30 million above, which is a pimple.
Okay, so here's the thing. You see only $70–80 million of Bitcoin being traded each day, but how long has it been trading like that?
How long has it been trading like that?
Months.
Yeah.
Months, right?
Yeah, unless...
So think about it. If you and I buy or sell a Bitcoin, right? We might buy one today, we sell one tomorrow, we buy 5 today, sell half, 2.5 tomorrow. The amounts that we buy and sell are so small that it's not worth mentioning, right? But there's 80 million, 70, 80 million of it being traded every day. Who's buying all that? It's gotta be somebody with big money. And what they're doing is like, because there's a lot of Bitcoin projects that's going on out there, and there's people that's doing private projects. We only hear about the public projects that people work on, like R3, Sev, and those places like that. But what about all the private projects that no one talks about? I mean, not everybody's gonna release what they do. And if they build their project on top of the Bitcoin network, on top of the Bitcoin blockchain, guess what they need to run it?
Bitcoin.
Bitcoin. And there are people out there that I believe, I don't have any evidence of it, but I believe that there are companies and businesses out there that are building Bitcoin projects and Bitcoin applications that are very powerful. They need money. They need not just money, but Bitcoins to run their projects. So because of that, they're buying a little bit here and there, and then they're testing it internally, and then when they release it to the public, they might need all those Bitcoins and stuff. Like imagine if you're the New York Stock Exchange or the NASDAQ exchange. The NASDAQ has already tested some over-the-counter stocks being cleared and settled on the on the Bitcoin blockchain. So when they do that testing, do you think they're gonna do it with 1 or 2 Bitcoins? No, they're probably gonna need a few. So they're gonna accumulate some and just put it there. And for them to buy up 100 or 1,000 Bitcoins, that's nothing to them. See, to us, it's a large number, but to the big institutions, that is nothing. For them to buy $1 million worth of Bitcoins, that is nothing to them. That means nothing. You like look at the Winklevoss funds, these Bitcoin funds that people are starting up. For them to buy $5 or $10 million worth of Bitcoins, that is nothing to them. I mean, they're talking, the investors that invest in these funds in America, they have to be a millionaire, a net worth of $1 million, and they have to be what's called an accredited investor, meaning that they have to have $1 million net worth, and they have to have an income of $250,000 a year to invest into these funds, right? That's by law in America. That's not my rules or your rules. That's an American law that you have to have that kind of money in order to invest in these types of hedge funds. And if these hedge funds are buying, like, if you're an accredited investor and you give these hedge funds $200,000 or $500,000 or $1 million, and if they collect that from like 100 people, do you think they can move the market? Dude, they can move the market so easy. It's not even an issue. And that's the thing, is that individual traders at home, it's hard for them to imagine. It's hard for them to imagine those large numbers, 10, 20, 50. It's even hard for me to imagine, you know? But for these big institutions and hedge funds, that means nothing to them, you know? And that's why I believe that that's what's happening. And we'll see, we don't know, but that's what happens in the stock market. And I believe that I believe that's the same thing that's happening. Whenever we see that consolidation, that's what's happening in the Bitcoin market, you know? So if you guys like these type of videos, guys, give me a thumbs up. If you guys don't like it, give me a thumbs down. If you guys haven't subscribed to my channel already, make sure you do. And if you guys have any friends, family, or colleague that are interested in investing in the cryptocurrencies, make sure that you invite them to check out my channel and subscribe to it, and I'll share any new information I come up with you guys, all right? Thanks for watching this video, and I'll see you guys in a future video.